Welcome to Nasdaq Trade Talks. I'm Jill Malandrinoga, Global Markets Reporter at Nasdaq. National Financial Literacy Month is celebrated in April, which is a great opportunity for us to check and promote our financial situation and skills. Joining me is Nathan Kim, Managing Director and Head of TIGER ETF Portfolio Management with Mirai. And for this segment, we are going to discuss the Korean ETF market and retail investor education. Nathan, it's great to have you with us. Welcome to Trade Talks.
Hi, Jill. Thanks for having me.
Mirai Asset is a key player in the ETF market. Please tell us about the local market and product development trends in Korea.
As with the rest of the world, Korean ETF market has enjoyed a phenomenal growth over the past decade, where ETF assets grew over 10 times during this period. Today, the Korean market stands at $60 billion in size and continues to grow at double-digit percentage every year. We have seen significant shift in investor preference over the past couple of years, which in turn has impacted product development trends. For example, there has been increasing demand for exposure to US tech stocks as they strongly outperform the local benchmark. Also, we saw a growth in demand for overseas thematic concepts such as China electric vehicle, secondary battery, and global metaverse, which has all received widespread media coverage. As an ETF issuer, we continue to gauge investor interest and provide products that resonate well with our investors.
In view of ETF products tracking Nasdaq indexes, local investors can easily invest in the US and global markets. What is your advice to retail investors when they are investing outside of their home country?
Korean investors have the choice to invest in overseas market through onshore and offshore listed ETFs. Onshore listed ETFs provide the convenience of trading ETFs during local trading hours, as well as avoiding the trouble of converting Korean won to US dollar to trade offshore listed ETFs. When investing overseas ETFs, the key factor to consider is whether the fund is hedging overseas currency exposure. An ETF that hedges foreign exchange risk has the advantage of delivering overseas equity returns without worrying about FX volatility, but currency hedging costs are incurred through the fund. On the other hand, unhedged ETFs deliver the performance of the underlying plus the difference in return between the local and overseas currency. FX unhedged products can be beneficial to local investors in an environment of expected rate hikes or when there is a flight to safe haven asset because the US dollar holds strong during these times. Whether the ETF is FX hedged or not is a determining factor in fund returns, and we advise investors to take this into account when investing in global markets.
Nathan, as a well-established player in Korea, what do you want to tell investors about lessons you learned from the pandemic? Also, can you share with us how you educate retail investors?
The pandemic brought about the fundamental change to the ETF market. For instance, we have noticed investors getting more directly involved with ETF investing throughout the pandemic. As people has more time and excess cash to invest during the lockdown, retail investors started to directly participate in the market rather than relying on financial advisors. ETF holding from retirement and personal pension account have grown significantly over this period, where the amount invested in ETFs by this segment grew roughly 4 times. As more and more retail investors are taking investment decision into their own hands, it is important to give them proper educational resources on financial products. In terms of retail education, we continue to utilize traditional outlets to educate our investors and seek to further expand our digital marketing efforts in order to reach a broader investor demographic.
And finally, you mentioned earlier how fast the ETF market in Korea grew over the last decade. What does future growth look like of the local market?
The Korean ETF market broke the 50 billion US dollar AUM mark for the first time in 2021. And we are optimistic that the local ETF market will continue to grow at a fast pace, driven by a couple of factors. First, the Korean ETF market size as a percentage of total market cap of KOSPI stands at only 3%, which is relatively small compared to 12% in the United States and 9% in Japan. Second, the further diversification of the ETF investor base will continue to grow. Last year, we witnessed record high purchasing of ETFs from personal pension and retirement pension account. So part of our strategy for 2022 include continuously tapping into this segment, offering overseas exposure that meets pension investment requirements. The third factor is the gradual change in investor preference and behavior. The Korean ETF market has traditionally favored leveraged and inverse products with a strong home market bias. However, we are seeing a shift in investor preference where retail investment allocation have shifted to overseas equities and thematic products. In closing, I'd like to say the growing adoption of ETFs in retail investors' portfolios will require continuous investor education, and we are committed to providing high-quality content for our investors so they can make proper investment decisions. Thank you.
Nathan, we appreciate the insight. Thank you for joining us for National Financial Literacy Month. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.